Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the Morning Call Express. Futures are up about 6-7 handles on impressive UK GDP data. They seem to think that the recession is over there, but what happened yesterday, and a couple guys got stuck, we had Futs up about 8 handles, bought it, and then obviously came down at the end of the day. So does it feel the same as it did yesterday?
Well, typically the market wants to make everyone feel as poorly as possible about themselves. And yesterday, we were oversold enough for a bounce. So I know for myself, in the first 30 minutes, I was looking to buy some longs because I'm like, you know what, the oscillator's minus 45, which is a good spot. I knew that we weren't near levels that are like compelling with the S&P at the 100-day or that 1370, 1380, but it was worth a try. And literally, if you tried buying stock in the first 15 minutes, later in the course of the day, you definitely weren't feeling so good about it. So today we walk in and the futures are in the exact same spot. Right. So the question is, can we extend? Can we hold the gap? And, was yesterday the low? That's the talk right now.
Well, we have some really key levels that we have to look at as well, because we have some important data coming out here as well, including durable goods, jobless claims. Of course, we have the nat gas inventory levels, and that's been a huge story. So what levels are we looking at?
So if you go to the chart of the S&P, because this is what we do, you go right here, you will see, there's been a lot of times to sell. You had clues. This was the unemployment, 7.8%. This is when, remember, Google halt on this day with IBM breaking the 100 and 200 day. That was your spot, or 1445. So coming into a resistance or a support area, around here, it made sense to cover, but I think guys like myself have been waiting for this, 1394 or maybe even 1380-ish in order to put back on some swing trades for an end of the year move. So the question is, can we reclaim this broken area? Can we get back above 1425 to 1432? That's going to be a spot that the bears are going to have to defend in order to continue this corrective type process.
Moving along to the sector spotlight, we're going to take a look at some IPO names this year. We have 4 new ones launching today, but let's kick it off and look at Coors. It's been a really nice performer.
Yeah, Coors has been moving. It's been, it shows you that the process works. For the past year or so, it's been unbelievable for guys involved in the IPO, the secondary, even investors. Oh, imagine that. You could actually buy an IPO in the first few months afterwards and get rewarded. So right now what it's doing is it's consolidating one more time. You take a look at the chart here at Coors, and you will see that it's holding above all the moving averages. It's holding nice support. You could be trading this thing or long it versus this 5150 area with no pain. It did try breaking out a few days ago, but it was a weak market. So I think traders are going to look for some momentum. If you can finally get above 57 or so, it gets on the move again after this 3-month consolidation.
Moving along to the trenches, we're going to take a look at 5 names that we spoke about last night in my webinar that I co-hosted with John Najarian of Option Monster and, of course, CNBC. We're going to take a look at Apple. Everyone cares about that. And also Amazon. Those 2 big names are reporting at the bell today, at the close.
There's a lot of anxiety around Apple right now because, if you sold it correctly when it broke the 21-day, if you sold it at like 680 or so, now it's trading around 620. People think that they save themselves some pain. So the question is, do you take it into the number or do you wait till after the number? Because if the number's not great and their guidance is conservative, if you look at the chart here, you could see, the potential of the 200-day. Okay, but if they come in line and they actually talk up the fourth quarter, you could see 660 in a New York minute, if not higher. So what I think you should do, okay, is 2 things. So my strategy for people is going to be do a call spread.
Right.
So this way you're in it for the report, you have defined risk, and you're selling on call to finance it because of the premium, and I'm not an option guy.
And we'll talk about that in the long call version. We have 5 nice options plays today.
All right, good. And then if the report's bad and you did it and you lose your money in the option play, I do think you'll make a lot more money after the report when you find support. If it gets to that 200-day, then you buy the stock and you have defined risk and you hold it. But taking the stock into the report, you better have a long-term plan. I'd say go with the call spread, risk is defined, and then, if it doesn't work, you lose some money, you tried it, it was defined, and then you look for a support in the stock to buy, which could be around that 200-day.
And quickly, because we're so involved with the tablet wars here, what are you thinking for Amazon?
I think Amazon, last quarter people were scratching their head that why did they go up on that report. This quarter they're actually looking to lose money. So the fundamentals here, everyone's saying they're waiting for their ramp up, they're waiting for their margins to increase a little bit. I'm definitely not taking any strategy into this. If you look at the chart, it's come down a lot. If you look here, from 260 all the way down to 230, it's almost at the 200-day. So I'm going to trade it after the report, and I would say a gun to head. I think it could be lower versus higher, so be a bit careful.
All right, well, we have a lot to watch. So at the end of the day, every day, guys, catch Scott as he wraps up the charts for us on Options Profits, Real Money Pro, and T3Live.com.
Hi, I'm Sean Hendelman of T3 Live. where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.